How do you get initial vendors to build initial business credit? Well, more important, which vendors will approve you? How do vendors work? What do vendors do? That's exactly what we're going to decode in today's training. In today's training, we're going to talk about how to find the recommended and the right vendors to start building business credit. Look, you can't just find vendors to build business credit. They have to meet very specific requirements to initially use them to start building initial business credit. Then you can get access to other vendors that don't have to have those same requirements as you start to build a credit profile and score. Look, it might seem complicated, but I'm going to simplify it today in today's training. By the end of this, you're going to know what business credit vendors are, what starter vendors are, how to tap into them to start building a business credit profile and score. And you're going to know which ones to actually tap into to get started. So let's start with talking about why vendors and who vendors are. Well, vendors, especially starter vendors, are very special. And ultimately, what vendors are is vendors basically are credit that come or vendors are basically retailers that supply access to credit to buy their products and services. So when we think about loans, when we think about credit lines, when we think about financial institutions, whether it be fintech lenders or whether it be, traditional banks, they lend money. They give credit lines. They give a Visa card, a MasterCard. They'll give a loan. But vendors are very different because what vendors do is they extend credit typically in the form of net 15, net 30, net 60, net 90 initially, and then revolving after that once you qualify to basically buy things in their stores. So if we think about it, Staples, Office Depot, Sam's Club, Costco, Nordstrom, Walmart, they're all vendors. Now, they're not starter vendors, and we're going to talk about that distinction today. You can't start building business credit with those vendors, but they're all vendors. Walmart will issue a credit card to buy stuff in Walmart. Sam's Club does the same, right? Office Depot, Staples will issue you credit cards to buy or in order to buy stuff at Office Depot or Staples. And initially, a lot of these accounts are on net terms. Net 30, net 60, net 90. That means you have that set amount of time to actually pay them back. So we don't see secure credit cards in the business world. Don't get me wrong. Some of them do exist. They're hard to find. Wells Fargo used to have one of the best secured credit cards that's out there to help start building business credit, and they got rid of it. And there's really not a lot of other ones you're going to find. In the business world, we start building credit profiles with these net accounts. Way better than secure credit cards. Instead of giving a credit card company $500 and having access to $500 on our credit limit and then paying interest on the money that we've given them to be able to borrow against, with vendors, we actually can go buy stuff we really need to build the business, and we get a month, 2 months, 3 months, sometimes even longer to pay that vendor back. So very, very helpful, especially when we start building a business, because we don't have to start paying out of pocket for everything. We can get things on terms and sometimes have upwards of months to be able to pay back what we're borrowing. Now, what's the distinction here? What are these starter vendors? Well, starter vendors are very unique, as we're going to talk about, because these are the ones that you're using to start building a business credit profile and score. And with starter vendors, these are vendors that basically will give you credit with absolutely no credit check. So what they're going to do is they're going to actually give you credit without doing a personal and consumer credit check. Now, why do we care? Well, we care for two main reasons. First of all, we absolutely need to protect our inquiries as business owners. There's funding like Credit Line Hybrid, where one inquiry can cost you $25,000 plus in funding. No exaggeration. Lenders really do not like to see inquiries on your credit within 6 months, really even within 12, and they can't stand seeing inquiries from major financial institutions. So let me give you an example. You go to apply for a Staples credit card that's underwritten by Citi. Well, when you see a Citi inquiry on the credit report, other lenders do not like that because they do not know if you've already gotten credit with a Citi or not. They don't know if you're going to Citi, Bank of America, Chase, and applying for massive amounts of credit. So the minute they see these inquiries on the credit, they pull back and either won't approve you or will approve you for less money than they would have without those inquiries. So avoid inquiries on your consumer credit report at all costs. And obviously, the second reason a credit check can be an issue is if you have bad credit, right? If you got credit problems, they're not going to approve you for the credit card when they do a credit check. So we got to prevent credit checks whenever we can. And there's times with loans and credit lines we can't. There's plenty of times, almost always with credit cards, we don't need to provide a credit check if we're following the steps, including getting started with these starter vendors. Yay, and K-Tex, thanks for making it in. I appreciate you tuning in today. Hey, feel free to say hi to me. I love it when you tell me where you're from. So if you don't mind, give me a shout out. Tell me the city and state that you're coming in from, even the country you're coming in from, so I can give you a shout out, everybody, and say hello. So what do starter vendors look at to determine approval? Well, annual income, average balance in your bank account, sometimes bank references. They look at how long you've been in business, but most importantly, they look at your fundability. And this is why I talk about fundability a lot, because fundability has to do with your reputation, your ability to get money from the system itself, from lenders, from credit issuers, from vendors. And so the more we set up the business where it's fundable right from the beginning, and we're not going to talk a lot about this today, but the more we do that, the more appealing we look to lenders, credit issuers, and vendors. So even though they might look at your income and your bank references and some of the stuff, the main thing the vendors care about when you're just getting started, these starter vendors especially, they care about fundability, how you've structured your business, your entity. Do you have an EIN? Do you have a license? Do you have a business address, a business phone number? Is it listed with 411? Today's not the day we're going to decode fundability. We actually did that in yesterday's training. It's worth taking a look at 6 secrets that will help you build business credit. We've also got a lot of fundability training at creditsuite.com or youtube.com/credit suite. So you could take a look at, but fundability is very important. Now, there's more to the story here with starter vendors, because first, we've got to have ones that'll do it without the credit check, but we've got to find this very, very small group of starter vendors that actually will report our payments to the business credit reporting agencies. And that's really hard, because 97% of all vendors don't report the credit that they give you to the business credit reporting agencies. Now we're looking for an even smaller segment of the 3% that do, that will give us credit without a credit check, and that will do so that report. So again, very, very, very small group of starter vendors, and they change all the time. It's why we don't look at lists. I'm literally looking at what the vendors that our clients use to build business credit today, the starter vendors. And I'm like, oh my gosh, like almost none of these are even the same ones that were here 60 days ago. They just rotate, they change because of their requirements to fit into that starter category where they'll approve you without that personal credit check. Now, again, not all accounts are going to report. The most accounts will not report unless you go negative. If you have a collection, if you have a derogatory item, then they report that. Like if you default on a credit card with a vendor that doesn't report typically to Dun & Bradstreet, well, then they're probably going to report that collection to Dun & Bradstreet. So a lot of them won't report your positive payment history to a reporting agency, but they'll absolutely report the negative history when something goes into collections or even becomes a judgment. That appears. So you've got to be able to get credit with vendors that actually report the positive payment history. And a lot of people ask me, why? Why do so few report? Well, I can tell you, I don't know why the bureaus do this, but it is a nightmare to get to report to D&B Equifax Experian. We've helped a lot of companies through this process, and it's a nightmare. I mean, Dun & Bradstreet, for example, won't even touch a normal company unless you have thousands of accounts to report every month. So if you don't have 2,000 accounts, or if you're a financial institution, 500, to even report to D&B monthly, they won't let you report data to them. So think about that. As a small business owner, do you have 2,000 active customers to report payments to D&B? Most don't. It's why most vendors don't report the credit, because the bureaus make it so hard to be able to do so. So that's why there are so few vendors that report, and why there are so few starter vendors as well. And some things to keep in mind as you're going through this process. Nashville in the house. Welcome, Nashville. Hey, I was just in Nashville a few months ago. Love your town. Green Greenville, Mississippi, tuning in. Hello, live from New York. I love that. Chattanooga is in the house as well. Ivan, hey, what's up? K-Tex, how's it going? I'm glad that you were able to make it. And what is up, Ocean Springs, Mississippi? The real Tommy, thanks for coming in. So not all starter vendors will report, as we mentioned. So you've got to find vendors that meet these two requirements. We've got to find ones that will initially approve us without credit checks, without guarantee. And by the way, in the business world, these two are pretty simultaneous. You don't find a lot of them that will require a credit check and not a guarantee, or a guarantee and don't require a credit check. They're almost synonymous. And I'm going to say all the ones I've seen. I never say all of them because there could be some out there we haven't seen. But everyone I've seen, if they require a guarantee, they require a credit check. They require a credit check, they're going to require a guarantee. So keep in mind, synonymous is personal guarantee and credit check. So when I say we need vendors that won't do a personal credit check, these are pretty much vendors that won't do a personal guarantee either. So we've got to find those unique vendors, and we've got to find the ones that actually report. So again, vendors don't typically make this obvious. That's the whole thing. It's why we have a paid service, right? It's why people pay us thousands of dollars to expedite and simplify business credit building, because we literally have a data team that goes to every single one of these vendors regularly and verifies who they report to, what it takes to get approved. And that's not an easy process. We have to deal with actual underwriters. So we got to go to Staples and build a relationship with somebody that's the head of underwriting that is willing to give us that information. That's not easy to do. And the other problem is that when you call and talk to somebody at one of these places, they don't typically know. They don't give you the right information because they don't know the right information. There's a difference at a Staples of the world when you call to ask them questions about where an account reports to and what's involved with getting a credit account without a personal guarantee versus actually getting to an underwriter. And if you ever call Staples and say, I'd like to speak with an underwriter, good luck with that, right? That's very difficult to do. As a matter of fact, I tried this the other day with a mattress firm account. I called and I said, I want to talk to an underwriter. She said, that's not even possible. It's all digital. It's all electronic. There's not even an underwriting department or somebody you can speak to. Now, whether that's true or not, you don't know unless you call and talk to 2 or 3 people at that same place. So again, this isn't information that's publicly accessible. And the other problem is that when you call in to ask them, do you report? Who do you report to? What does it take to get approved? Keep in mind, underwriters have the correct information. Typically, your frontline people don't have that information. So you can apply for vendors that hope to get approved, or you go through this process of trial and error. And again, this is the difference between working with an expert and not, is that trial and error is the way to build business credit if you don't have somebody that says, apply for this account in this order. Once you have 3 accounts, get these accounts. When you have 5, get these. When you have 7, get these. When you have 9, get these. We call that a tier system. So with our clients, we tier out the kind of credit they can apply for. And the reason I don't train this publicly is because it changes all the time. Every single day, our tiers change based on underwriting requirement changes from each vendor. So again, you can go through a process of trial and error and hope, work with an expert that can help you, but you have to keep in mind the information I'm giving you today is relevant today. Literally, it will not be relevant tomorrow because how often this information changes. Okay. So again, if we can help you along the way, I'm going to get you, if you give us a call, we give you a free consultation. We'll get your business credit reports. We'll give you tips and tactics. We'll help you through this process. Okay. So again, you got to kind of decide when you're going through this process, time or money. If you want to save time and build business credit in 6 months versus 3 years, well, then give us a call. We can help talk you through what's needed there and help expedite the process. Otherwise, you just have to be comfortable with trial and error because, again, it's a lot of coming in and applying to see who will approve you, who will deny you. And even me teaching you this, it changes so often that it's just really hard to be able to keep up with it unless you're following our lives. And, in this moment, these are the vendors that will help you. And these are the ones you actually want to go apply for. Okay. So you need to probably have about 5 vendors. The vendor list always changes because, again, the amount of people that will approve starter vendors changes. So a perfect example, Quill. one of the most well-known companies in the space of building business credit. We no longer consider Quill, and haven't for the last year and a half, to be a starter vendor. We moved them to tier 3. I think they're in tier 3 or 4 now because they've made it so difficult for people to get to initial credit. So you've got to keep in mind this vendor list, as I mentioned, changes all the time. So let's talk about who works today. Grainger, one of my favorite vendors, and I'll tell you why they're one of my favorite vendors. First of all, they'll give you a $2,500 credit line just because you have a business license. So if you don't have a license for your business, you can get one, even if you don't need one. If I go to Google right now and I type business license, Pasco County, Florida, which now I'm actually in, I'm in Hillsborough County, not Pasco, but that's the county I was in. So if I go type in, business license, Hillsborough County, Florida, it's going to give me a license I can get in this county. Some counties have them, some states have them, some industries have them. If you can get a business license, we found it makes a huge difference in credibility when it comes to applying for a lot of different credit. So it's something you definitely want to look into. Florida Panhandle checking in. You were in here yesterday. I appreciate that as well. Kim, Rochester, New York, tuning in. Thank you. And Kim says, any vendor intro for home care agencies. I'm a startup. I need ways to leverage my cash instead. We'll talk about some of these I think can work for you. So Grainger sells hardware, power supplies, pumps, more. They do fleet maintenance. They report to D&B. And if your business doesn't have a score, they may want some kind of income documents for you. But again, a business license really is the ticket with them. Now, you've got to have an entity in good standing, EIN, DUNS number from Dun & Bradstreet, business addresses that matches everywhere. It's got to be congruent. A business license is really going to help you here, and a separate business bank account. They're not going to ask for bank statements. They're going to ask for a bank reference. And they also need to be, you need to be in the Secretary of State. Your entity needs to be set up 60 days. Grainger's a true starter vendor. Even if you have no other credit on your credit report, they will approve you. But notice the key is a DUNS number. The key is a license. Those are two things normal startups don't have. You want to go through the fundability step. All of this stuff would be addressed in fundability. You want to get that DUNS number with Dun & Bradstreet. You want to make sure that you can get a business license if you can, because if you can get one, it'll get you a $2,500 credit line. Now, a lot of people will say to me, hey, some of these starter vendors, and here's a perfect example. Orlando's in the house. What's up, man? I was just in Orlando the other day. I'm going back again. Can we get in contact with you? Absolutely. info@creditsuite.com, and my team can connect. Okay. And so as we look at Kim here, she says, I need credit specifically for home care agencies. Keep in mind, as we talked about, 97% of vendors don't report. Very, very, very small segment of the ones that do that classify as starter vendors. So you might not get starter vendors that fit the bill exactly as you need them to, that sell stuff that you need for your specific industry. You might have to make some sacrifices and buy some stuff that it's not everything you need to run the business from your first initial starter vendors to build the initial credit profile and score. And it's worth it, because once you have a handful of these payment experiences, then regular vendors open up. Staples, Office Depot, Sam's Club, Amazon, Walmart. As a matter of fact, Amazon's one of the most easiest to get vendors after you initially get your starter vendors reporting. And let's be honest, almost everything that we need to run our businesses we can get from Amazon. So Amazon's one of the regular vendors you can tap into after starter vendors are established. So even if you don't find the things you need from these starter vendors, it's okay. We just need to build the initial credit profile and score. We're using them to get that. Then once we get that, we can access all of the kind of vendors. Now, let me reference and clarify that I don't mean we use them and we ditch them. I'm very loyal. I'm loyal to a fault. Like, it's my number one characteristic in life is loyalty. Loyalty. It is my thing. So I still use Quill because Quill gave me credit at the beginning when Staples wouldn't. I still use my starter vendors. I still buy stuff from them because I appreciate that they help me when nobody else would. And I don't know about you, but that's how I operate. If you give me a merchant account to accept Visa cards and MasterCards when nobody else would, then I have 2 years of history. Then everybody's beating down my door telling me they can beat the rates. I tell almost always what I say to them is, look, loyalty is more important to me than money. So the reality is you weren't there to help me when I started the business. They were. And I don't really care if you can save me a little money. The fact that they were there to help me means I'm going to stay loyal to them until they lose my business. And that's just the way I operate. So you don't want to just use them and then get to the next level and not. You still continue to buy some stuff from these starter vendors because they helped you when other people wouldn't. Other thing to keep in mind is that you need to use them every 12 months. If you don't use them within 12-month time period, then it won't show as recently used on your business credit report. So when we look at business credit reports, they don't show credit limits. They show the recent amount of credit we've used. Very important in this discussion for two reasons. First of all, we've got to use the account every 12 months to have something show in the column of recently used. The second thing is that the credit bureaus are telling us something very important here by telling us, what the heck is that? Oh, it's over here. I was like, why is that so small? They're telling us something very important here by telling us the recent amount of credit we've used, not the limits. And what they're telling us is that it's important for us to actually use the credit that we're given. If we're not using the credit that we're given, then the problem is that then it really won't count towards our score. It's not going to help us. So here, I'll give you a real commercial credit report here with Experian. I'm going to show you exactly what I'm talking about here. Here is an account here, which we'll talk about this account that it's actually you can get today. So you can see here, here's the category. Business credit reports don't have a name like Staples. They just have a category like packaging. We can see the terms, but here's what I'm talking about. Recent amount of high credit you've used. We don't see a limit here. We don't see a credit limit anywhere on the report, but we do see the recent amount of credit you've used. So it's important that we use this credit every 12 months. I recommend every 6, really. And that we're not just using it minimally to buy $50 or $100. The more we spend with these vendors, the higher this amount is. The higher that amount is, the higher the limits are going to get. So the more that we use this credit, the higher the limits are going to get. And I'll show you what I mean here. When we look at people like this, not a good example. Let me give you another one here. Let me see if I can find a good example here. Okay, so this is somebody, we can see that on their commercial credit report, they're using this credit. The recent amount of credit used is just, it's higher here. $1,800, $4,000, right? $1,200, $9,900. Okay, so as a result of these limits being higher, then Experian raises the recommendation of credit. So what happens is if we don't use and buy stuff and we just use it minimally, then the recommendation of credit still stays low. Recommendation of credit is going to raise the more accounts we have reporting to Experian and the more we're using those accounts. So you don't want to just come in and only spend $50 at every one of these places and only move through the tiers by spending small amounts of money. Your credit limit recommendation is never really going to increase then. And then the problem is that we're always going to be given very small limit accounts, and we're not going to be given these high limit accounts like we really want to see. So we've got to make sure that we're actually using the credit that we're given. A lot of side notes there, but all stuff that I think is going to help you along the way. Uline is the one we just looked at. They're the packaging account that I told you on that commercial credit report I tell you how to get. They report to Experian and Dun & Bradstreet. Very valuable to us because this counts as 2 payment experiences. So we want 5 payment experiences to move on to regular vendors, to Staples, to Office Depot, to Amazon, right? But a payment experience is the reporting of an account to a reporting agency. So we just looked, for example, at Grainger that reports to Dun & Bradstreet. They are 1 payment experience. When we look at Uline, they are 2 payment experiences because they report to Experian and Dun & Bradstreet. So I just snuck in a tip that's going to help you radically increase the speed of building your business credit. Get accounts with credit issuers that report to multiple reporting agencies. It gives you more payment experiences quicker and helps you navigate through the tiers quicker. Now, Uline sells packaging, supplies, and all kinds of stuff you're probably going to use for your business. They also need a good entity in good standing, an EIN, and address matching everywhere, a DUNS number, a license if applicable. They'll ask for bank references, but they also want your phone number to be listed with 411. Now, notice something here. Notice that Grainger didn't have that requirement and Uline does. And the reason that's important is that this is how fundability works. When I teach fundability, I teach all the stuff you need to do to be fundable. And you'll notice that some credit issuers have some fundability requirements and others don't, right? So a simple example is Walmart will not approve you for a corporate card if you use a home address. They just won't do it. Amazon will. Okay. Grainger will approve you. They will if you don't have your phone number listed with 411. Uline won't. You got to make sure fundability is in line because that's going to give you mass appeal to all vendors, including starter vendors. If you don't, there's just going to be a lot of people that are going to deny you because your fundability is not in line, which again is a large part of the actual issue. Okay, so Kybra says, me too, Ty. I'll continue to use vendors from T. Yes. And Flores says, what does it mean to be registered with Secretary of State? They are who get the IN. Okay, so they're not the ones that get the IN. Let's talk about this. Your Secretary of State is the one you initially set your entity up with. If I want to set up Credit Suite as a company, I go to Florida, which is where I live, where our business is, and I go to the Secretary of State and I register my entity, my business, Credit Suite Incorporated, with the Secretary of State. That's what officially gives me a legitimate registered business. Then I take the registered business, I go to the IRS at irs.gov, and I get the EIN from irs.gov. So the entity comes from our Secretary of State, and you could just search, Florida Secretary of State and find the ability to set up an entity. Then once we have the entity set up, then we get the EIN from the IRS. So two different, very good question, but two different sources there because the entity comes from the state and the IRS is the one that supplies the EIN. And it's going to be easier if you don't have fundability in line to have a PAYDEX of 80 or higher, which means you have some accounts reporting to Dun & Bradstreet already. It's not required, but it's easier to get approved with Uline if you do. If not, and your fundability is jacked up, they may make you place some prepaid orders as well. Okay, so keep in mind that that's the case, right? They might make you place prepaid orders if you don't have your fundability in line or an 80 PAYDEX score. Marathon, petroleum company, they obviously sell gas. They report to Experian, Dun & Bradstreet. They also are one of the sources. They offer WEX fleet cards. You don't want to ever apply for too many of these gas cards at the same time. A lot of them are underwritten from the same source. And what happens is if I apply for a Marathon, Pilot Flying J, which, by the way, Pilot Flying J is another great starter vendor. I just threw in a bonus extra one for you. I don't want to go get Pilot Flying J, Marathon, Kanoko at the same time. They're underwritten by the same source. The same as Staples and Office Depot are underwritten by the same source. So if I apply for too many gas cards at the same time, they'll deny my second application and cancel my first card. I see this all the time from non-clients that come in and ask us what's going on because they think it's fraud. So don't apply for too many of these fuel cards at the same time. People say, how often? I don't know. I would wait at least 30 days. There's no set rule, but we've not found people applying after a 30-day time period have that problem. Report to Experian and DB, two payment experiences, very similar pre-qualification requirements, entity in good standing, EIN, address matching everywhere, DUNS number, license, and if applicable, bank reference, phone number listed with 411 required to get approved with Marathon. Okay, and your SSN is required for informational purposes only. Okay, they will and possibly require a $500 deposit from you if you don't have your fundability in line or you don't have any accounts on your business credit reports. They may want a $500 deposit. If you don't want to do the $500 deposit, establish some more accounts on your business credit reports and even through starter vendors, and you'll be okay. But this brings up an important point, is that most of these starter vendors, Grainger and Uline, won't ask for your social. They're not even going to ask you for it. But places like Marathon and all fuel cards will, and here's why. In 2018, the government passed a law that actually requires all banks to verify the identity of anybody that they're opening an account for. Well, Uline, Grainger, they're not underwritten by a bank. They're underwritten by themselves. Marathon is underwritten by a bank. So because, for example, Staples and Office Depot are underwritten by Citi, then what happens is, since Citi's a bank, Citi has to verify your identity. That's why they ask for the social. What I love about fuel cards is fuel cards will clearly tell you that. Like when you go to apply for a Marathon account, they will tell you, we need your social only to verify your identity. We're not doing a credit check. We're not doing a guarantee. So when you're building business credit, never supply that social unless they clearly tell you there's no PG or credit check. If you're going to, you need to fax the application or call in and tell them you're not authorizing your credit check or guarantee. You're only supplying the social for identity purposes, and it's going to help you avoid any issues with them inadvertently actually pulling your business credit reports when you necessarily don't want them to be able to do so. K-Tech says, hey, I have many recent inquiries about 4 months ago on personal credit. Can I start to apply? Yeah. Your personal credit inquiries won't affect vendors at all. They don't care about that. None of that. They're not even going to look at your personal credit report. Everything I'm teaching you today, your personal credit report's not even being looked at. I gave you the advice earlier about minimizing inquiries to help you with loans or credit lines, not with credit from vendors. Okay, just so you know that. All right. So SupplyWorks, they are a part of Home Depot. They actually got purchased by Home Depot. They sell facility maintenance supplies. They report to Experian. They'll give you a net 30 account and very similar requirements. An entity in good standing, EIN, address matching everywhere, DUNS number, license if applicable, bank reference. But they're also going to ask you for trade references from other people that you pay as agreed. Notice how the underwriting requirements are different. This is why you want to get fundability in line again, because all their underwriting requirements are different. But if you have fundability in line, you're going to meet all these requirements. Okay. No minimum time in business requirements in order to actually get approved. Okay. So SupplyWorks is a good one. Now I'm going to throw in one more here. And I already threw in one extra when I told you Pilot Flying J. I'm going to throw in one more, which is Advanced Auto Parts. That just hit our list and it moved from tier 3 to starter vendor as of this week. So I just gave you a big nugget that Advanced Auto Parts is also now applicable as a starter vendor. Not to say they will be next week because they weren't last week, but they are this week. So another one you can try, and that should give you like at least 5 that we've now talked about. So beyond recommended vendors, these are great for getting started. Keep in mind, the next tier comes with 5 payment experiences. If we can help you, give us a call. We'll get your credit reports for free. We'll give you tips and tactics to move on from this tier to the next tier. You've also got to remember, you got to apply for credit in the right order. If you skip the starter vendor step, you're going to be met with a ton of denials. And it's a problem because some of these sources will require 3 to 6 months before you apply again. You can't mess this up. If you mess this up, then you go to Amazon prematurely because you really want Amazon. Amazon denies you. You can't reapply for 6 months. You lose your shot to get the vendors you really want. So you got to make sure you're applying for in the right order. You got to make sure you have 5 payment experiences here before you even think about moving on to regular vendor tier, which are retailers like Office Depot, Staples, Lowe's, Walmart, Amazon. Okay. Remember, you've got to use these wisely. Remember, as we talked about, you don't want to just get them and not use them. You want to get credit with vendors that you can use and use them, because that's going to help your business credit reports and raise your recommendation of credit as well. Okay. And keep in mind that these vendors change all the time. Okay. So you've got to make sure that you're building business credit. You're limited on these vendors. So get the ones you can. Make sure you're using the credit on a regular basis. It becomes very important. And again, there's always stuff you can buy at these vendors. People tell me, for example, well, there's nothing I can buy at Grainger. I buy first aid kits at Grainger. I buy batteries at Grainger. There's nobody here, especially if you have kids, there's nobody here that has kids that doesn't need first aid kits, because my kids get hurt all the time. There's nobody here that doesn't need batteries. We all have to have batteries. So Grainger sells, and those are just simple examples of stuff that even outdoor supply places like Grainger sell stuff we all need. You just got to find the stuff you need. And if it's not directly applicable to your business, who cares? Get it to get the trade line. The trade line's what we're working for. It's so valuable to you, more than buying a first aid kit maybe, right? You also want to consider non-reporting vendors. I'm not going to downplay the 97% of vendors that don't report. These vendors can be useful to you. And I'll give you 2 simple examples: Apple and Best Buy. They don't report credit to the business credit reporting agencies, but they will actually give you credit. They will, based on your business credit quality. So these kind of sources, and I mentioned Advanced Auto Parts here, and you can see that our clients actually have access to all these starter vendors, and then they actually have the underwriting requirements, what they do, the application link. It's just, this is why they take years of business credit building and condense it to months. But the reason I want to talk about non-reporting accounts is because they're very valuable. There's a lot of accounts that fit into this tier. And you can see these are all our tiers, our final tier, right? These are all our tier 4 accounts. But as we go through, and this is where you get auto financing, and this is where you get computer leases and Visa cards, MasterCards. But we can look at non-reporting accounts, and these are credit issuers that will give us credit based on our business credit quality, but they don't report the credit to a reporting agency. Well, United Airlines is pretty valuable to us. Okay. If we look at places like Chase, if we look at places like all these banks that will give us credit, but that won't, again, don't report the credit, very valuable. So a lot of sources fit into this category here. We even look at Best Buy. We look at Newegg. We look at Apple. So very valuable sources that don't report. So don't write off those that are non-reporting accounts. Very valuable. And they can give you trade references, which will help you as well. So again, if we come in and a lot of them sell stuff that we want and need, even if they don't report. Okay, one of our clients, Christine, got a $300,000 account, vendor account, at a local vendor because they looked at her business credit. They saw it was strong. They gave her $300,000. They don't report that $300,000 trade, but that 30,000. Did I say 300,000? No, it was 300,000. So they gave her 300,000. It's a roofing supply company. She needed that to run her business. They don't report the credit. She doesn't care. She doesn't care if they don't report their $300 trade line. What $300,000 trade line? What she cares about is it's credit from a vendor she actually needs to really run her business. Okay, so some things to keep in mind there is that you can come in and get plenty of credit from vendors that don't report. There's a lot of stuff they sell that you need anyways, and they still will give you trade references, which helps you as well. So if we can help you through this process, give us a call to kind of get a synopsis here. We use these vendors to be able to get business credit. Vendors are Staples and Amazon and Walmart, and starter vendors are places that we talked about today, including places like Uline and Grainger. We need starter vendors to get started. We need a handful of these accounts to move on to regular vendors that offer revolving credit card terms. We need to make sure that fundability is in line. If we do that, it gives us the best chance of approval. In our next training, we're going to go over the timeline to build business credit. We're going to talk about the order of tiers you need to apply for credit with. And we're going to talk about the difference between what gets you approved and what gets you denied, how to maximize approvals and minimize denials. If you'd like to talk to us more, 100% free, you will get your credit reports with D&B Equifax Experian. Equifax is going to go away here before too long because they're doing something funky. We don't know what they're doing. But right now, you can get all 3 credit reports at no cost. They cost you $250 from the bureaus. We get them for you for free. We go over them with you. We give you tips and tactics to build your business credit. We also do a fundability check and help guide you on what needs to be fixed fundability-wise. And we do a funding qualification to tell you all the loans or credit lines you can get now. It all happens at $0 cost to you. And there's 3 ways you can get it. Give us a call at 877-600-2487. Email us info@creditsuite.com, or just go online at creditsuite.com/consult to schedule. Grab our free guide with more details and more vendors at creditsuite.com/live. Creditsuite.com/live will give you a step-by-step guide through this process as well. Brooklyn, New York, tuning in. Thank you for saying hello. Tucson, Arizona. I'm going to Tempe, Arizona on Friday for a meeting. Is Nav a payment experience? They are at this point in time, but keep an eye on them because we've seen them say they report, then not report, then report. So just keep an eye on them. If you're using them as a starter vendor, we don't have them in our system as a starter vendor because of the fluctuation of whether they report or not. Also, if you got value, hit the like button, hit the love button. That's all I ask. I try to pour my heart into this, and our team does a lot of research to bring this to you. All we ask is hit like and love, and here's why. When you do that, it just takes a second. But for us, it's very valuable because you tell Facebook, you tell YouTube, you tell LinkedIn, hey, this was valuable information. I got value here. Then LinkedIn, Facebook, and YouTube show it to other people. And my mission and our mission here at Credit Suite is to help as many entrepreneurs as we can. So you help us accomplish our mission. And let's be honest, we help each other as a tribe, as a network of entrepreneurs working to get money to grow our business just by hitting like and love. It's such a simple thing, but it helps us that much. And sharing helps even more. And make sure you subscribe so you get notified when we release new content. We're releasing videos now a few times a week. week. We go live Tuesday and Thursday at 1, 11 o'clock on Wednesday, all Eastern time. And when you subscribe, then you get notified when we go live. Also, check out our other social channels. At creditsuite.com, at the top right of our page, you'll find our Instagram, our Twitter, our Facebook, where we have daily tips. You'll find our YouTube, where we now have thousands of videos that will help you get credit financing, understand credit scores, understand credit reporting agencies that you don't even know about that lenders are using. We just pull back the curtains and teach you everything you need to learn to get the most money at the best terms for your business. Okay. And the other thing is tune into our podcast, the Business Credit and Financing Show. I do something very special there that I don't do anywhere else. I interview all these experts that teach you how to grow a business, how to brand the business, how to get customers for the business, how to monetize how to do upsells and cross sells, how to maximize profit of the business. Every aspect of running a business and growing a business, I discuss with experts on the podcast, and I bring in really heavy hitters on that show because the podcast has over 500,000 downloads. It's one of the most popular podcast financial services wise on iTunes. So as a result, we get a lot of high-end guests that come on there that teach you how to start and grow a business. So make sure you check that out as well. And you're asking about a net 30. A net 30 just simply means that you have 30 days to pay back that account. And we talked about that in the beginning. A net 30 account means that you have 30 days to pay back that account in its entirety versus a revolving account where you make minimum payments towards the balance to pay it down. So it's not secured, it's not revolving, it's in between. A net 30 gives you 30 days to pay it back, and net 45 gives you 45 days, etc. If you have any questions, give us a call. We'd love to set on a consultation with you, help you with fundability, business credit building, and financing. And look out for our next training where we're talking about more cool ways to get money to start and grow your business. Thanks for tuning in. Look forward to seeing you on our next training where we're going to talk about everything you need to know tier-wise to navigate the rest of the business credit building process. Take care. Have a great day.